Hello, and welcome to the Fintech Times Podcast, focused on discussing the latest fintech topics and trends from around the world. Established in 2016, the Fintech Times is a global multimedia news outlet centered around the world's first leading fintech newspaper. We report all the latest and brightest ideas from the fintech world. Hello everyone, and welcome back to the Fintech Times. My name is Tyler, and today I am joined by Brian, Brenton and Craig, all the way from Australia, and they're here today to speak about open banking payments and their capabilities in cross-border transmittances. So if we would just like to start by maybe getting an introduction from each speaker. Brian, why don't you start us off?
Ooh, lucky first. Hi, everybody. I'm an American on an Australian podcast at the moment, so this will be a fun one. Thanks for kicking off with me. My name is Brian Collins. I am the Fintech Managing Director at Startupbootcamp Australia. I have been in the Fintech space since 2014, working with companies like MasterCard, UBS, IBM on their Hyperledger focus, and we run a FinTech Accelerator program where we have invested in the last 3 years in 27 companies, 3 of which were domiciled in Australia before we began working with them, but most of the companies we work with are looking to expand into Australia. I also sit on the board of FinTech Australia, and that's a little bit about me.
Well, thank you very much, Brian. It's fantastic to have you here with us today. If we stay in alphabetical order, I guess, Brenton, you're next. Brenton, why don't you give us a little bit about who you are and where you come from today?
Thank you, Tyler, and great to chat to you all today. My name is Brenton Charnley. I'm the Australian and New Zealand CEO for Truelayer. We're an open banking global platform for those of you in the UK, which you are, Fintech Times. You'll know Truelayer quite well in terms of what we've done over the last 6 years in open banking across UK and Europe. And I'm pleased to lead the business down here in Australia. I've been in FinTech and InsurTech for the last 7-8 years. InsurTech was where I was most known for before joining the worlds of open banking, and I founded InsurTech Australia, which was the Association for InsurTech Startups and the Global InsurTech Alliance as well at the same time. But I'm pleased to find myself back in FinTech or the broader FinTech and working in open banking.
Well, that's fantastic. Thank you, Brenton, and we're very happy to have you with us here today. And last but not least, we're joined by Craig. Craig, you just like to give a little introduction to yourself.
Hi there, I'm Craig Rees, and to round up on the global nature of this podcast, you've got an Englishman speaking on the Australian side of a podcast that's going out to people in the UK. So that's definitely what you call a boomerang. So I look after Airwallex's global platform team. For people who don't know Airwallex, we run a global financial infrastructure platform that helps organizations run and operate their business globally, as well as helping organizations build and then deliver their consumer propositions as they roll that out anywhere in the world. I look after our product teams and our commercial teams around Europe, APAC, and the US. I've been with Airwallex now about 3.5 years, which makes me an old-timer. So happy to be here.
Well, thank you so much, everybody, for taking the time to join us today and to introduce yourself to our listeners. Of course, this podcast is going to be all about everything that's happening in Australia at the moment, the whole fintech scene, and how that's really been exacerbated by its current state of being. So without any further ado, I think we should just dive into my first question, which essentially is, we're talking about embedded finance in Australia, and really we're seeing this sort of the growth and the emergence of this whole new ecosystem. Perhaps maybe you might see it differently. But my first question to all of you today is, what do you see the current state of embedded finance in Australia as being? Brian, why don't we start with you?
Lucky first a second time. I think it's important to note before, look, Brenton and Craig are going to be able to dive into the intricacies because this is their day-to-day work. I think what's important to note for if you are not across the Australian fintech ecosystem, or this is the first time you're really starting to look into what open finance or embedded finance looks like in Australia, is just to understand a bit of how we got to where we are now and what the current state of play is. So as far as Australia goes, we're a little behind in the sense of where embedded finance and open banking is in other regions of the world. The UK is obviously a global leader in that space. Singapore is another global leader. Europe as a whole is really doing very well in the space. Our GDPR moment, kind of the beginning of this for us was what we call CDR, Consumer Data Rights, which was both a data rights legislation as well as an open banking protocol and legislation. That came about in 2019. The major banks then had a timeline that they had to subscribe to begin opening up their data ports. Then COVID hit. Then there were extensions that were given to that. So instead of really having things kicking off really effectively in that 2020 period, it was late 2020, early 2021. We're now at the point where CDR's roadmap is pretty clear, that we're moving to telcos are currently going through their opening up of CDR. We then move to energy after that. And it looks like superannuation, which is our pension fund system here in Australia. It's a very different type of a system because it's all privately run instead of governmentally run funds. That looks like it will be the next thing on CDR. So from a timeline perspective, we're still early on in the embedded space. And I think Craig and Brenton are going to be better slated to talk about where we're at specifically right now. But I think it's important to understand kind of where we've come from a CDR perspective to get to where we are now.
And I think as we think about that, as we talk about CDR, that's very much akin to AISP in Europe, so Account Information Service Providers, which is a part of or is a capability in how you can embed financial services into your platform, into your proposition. However, as Europe with open banking has gone into PISP, Payment Initiation Service Providers, which really is where true embedded finance solutions start to become real. As you look at stored value propositions, as you look at pure financial services as an add-on to your current proposition, Australia is nowhere in that yet. We've got some legislation that's starting to talk about payment initiation, but we have really no program of work to the extent that you're seeing in Europe that would support it.
Well, thank you very much for sharing that with us, Craig. And Brenton, I was wondering if you had anything you'd like to add about the current state of embedded finance.
I mean, I think for me, embedded finance and open banking are not the same. I think that's probably the first thing to say, because you can embed financial products without needing to use open banking regulations or technology. That's the first thing. I think open banking does enable or supercharge that embedding component, right? If you think about opening. And I think Craig, Brian, we talked about, the Andreessen Horowitz piece, some time ago, where we talked about, every company is going to be a fintech company in the future. And I think equally, we haven't seen that play out, perhaps how they thought that was going to happen. It makes sense. And I think the reason being is just because you have a distribution channel, it doesn't mean you're the right distribution channel for a financial product. So I think for what we see as an open banking infrastructure provider across multiple markets, that's why people come to us as a business. There's two real kind of sweet spots. The first is leveraging financial data to do something that the consumer seeks, right? The only reason why you can pull in financial data in the first place is because you get the consumer's consent. So that's the first and foremost. If the consumer sees value, they'll give you the consent to grab their financial data from their bank account and then do something with that. And some of the first use cases that that are typically popular around personal or business finance management, tell me something about my finances that I didn't know before and do something there. Lending decision making is always an early starting point. And what we've typically seen at that start is the businesses that actually do that as their job. Like their core value prop, people go to them, will do that, and they'll do that. What we're starting to see now, and we've been at this for 6 years, is across UK and Europe, is businesses that previously don't do that as their core business, looking at integrating financial data. So what I'd say to you is, on a global perspective, we're seeing movements in embedded finance and the use of open banking. To Craig's point, and Brian's point, I agree, we're at an early stage. Truelayer, we've been here for the last 2 years. We've recently launched our data product, which enables the embedding of financial data to build better financial experiences. But there's not a lot of real use cases in the Australian market to this point. And I think the differences to what Craig's talking about between the two markets, there's a real, the UK has taken a deep approach to open banking in the fact that we've started with data and then moved into payments. And payments, as Craig's talking about, is one of the killer use cases, which really seeing the driver of consumer adoption. In Australia, we've gone abroad through the consumer data, right? It's a multi-industry or multi-vertical focus, right? So two different approaches. We'll see what plays out. But from our perspective, I agree with Craig. The payment is something that we really want to see forthcoming. And the reason being is if someone gives you an insight, financial insight about what you do, there's always a so what from it. And typically that's a transaction. In most circumstances, if someone says, hey, you've spent too much money or you could do this, you want to actually move your money either by transacting with a merchant or doing something with that money. So for me, we will get to the end state for embedded payments when we can see payments coming in Australia, which is a couple of years away.
Well, thank you very much, everybody, for sharing your thoughts. And we really touched upon sort of the differences between the two regions, between Australia and the UK. And Brenton, maybe this would be a really good question to start with you, because as you mentioned that you'd worked in a lot of different regions. But for you, the way that you see it, what makes Australia an attractive climate for open banking?
Yeah, I mean, just coming back to my last point, I mean, it's the breadth absolutely that Australia has at this point in time, right? So, there's some graphics that the listeners might have seen about, moving away from open banking to open data, open finance, and then into open data more broadly. What I'd say to you, the consumer data right in Australia, which is the broader version, is kind of starting on the outset and saying, well, we want to not just have open finance, we want to have open data a little bit more broadly. So the fact is, as Brian's talking about, they're going for energy and telecommunications is suggesting it's not just about financial data. So that's what I think makes the overall market a bit more attractive. What I'd say to you is the use cases are yet to be seen in those markets. So I'm not sure about in the UK market. The last time I changed my energy and telco providers wasn't very frequently, right? So switching is often a use case that comes up, but I use payments every day, right? So I think this is one of these things we will see it play out in the consumer data, right? How the use cases come to the market. But for the listeners, the data regulations are what I would say from the time that it's taken to get to where we are in terms of bank coverage and adoption is quite fast in the context of the UK. So we have high coverage in Australia for an open banking product. So we're at 96.7% of accounts. And we've also got very high account type coverage as well. So we've also got included in that is credit cards and business and consumer and lending and savings accounts. All right, so that's quite a lot. So it's not just about transactional accounts, it's actually quite high. So if you're interested in data products, we have a fantastic data product in Australia. When I'm talking about that, this consumer data right, it's got very high coverage and broad coverage as well. The other thing that is attractive is the reciprocal data holder obligations. That is, if people start consuming data, the network is going to get a lot bigger. So if you have data that you consume and you're not required to provide that, if you start consuming data, you're also brought into the system and therefore creating a bigger and better market for the data.
Well, thank you very much, Brenton. That's everything that you've raised so far has been incredibly interesting. I was just wondering, Craig, did you have anything that you wanted to add to that?
Look, as Brenton has mentioned, we've got depth of data in Australia that is greater from a coverage perspective than you're looking at in the UK. So I think that there's an interesting point of what is the use case that you're using open banking for in the UK? What's your proposition? And the likelihood that will be covered if you're an AISP or using AISP type services out of the UK. So looking at an opportunity to grow in Australia off the back of that, I think is a key opportunity there. What I would say is, if you're looking at the full open banking set of capabilities and looking at payment initiation, and if your business model is or the revenue streams are off the back of payment initiation, which tends to be the case, it's off the transaction that's the trigger, then you're going to have difficulty in lifting your proposition in the UK and actually just dropping it over into Australia. There are going to be some workarounds. Pay2, which is a capability which has moved on as a version 2 of direct debit in Australia, has got some likenesses to payment initiation with real-time acceptance of a payment request, for example. So there are some workarounds that you can utilize, but that full breadth of capability that you would see from PISPs in the UK are going to be limited as you come to Australia. So I think as these organizations are looking at that proposition and looking at new markets, you've got to be considerate of that. And even though I think we got to quite a strong coverage with CGI in the account initiation service provider capability or sphere, it still feels like it took a long time to roll out. And let's just say, I think we're going to be flying directly from Australia to the UK before we see any sort of payment initiation setup here in Australia.
Yeah,
which
I
is
mean, I think you're right.
2025.
2025. I think you're right. I mean, to add to that, if you don't mind, Tyler, I agree with what Craig's saying. Like, it's disappointing. I think it's disappointing to see that we know, based on our experience in UK, Europe, payments is the real value add for open banking at this point in time. It's that so what that we're talking about, and it is going to take some time. The government has announced their commitment to releasing action initiation and a subset of that payment initiation in Australia. But it is going to take time for that to be legislated and all the banks to build the API services that are required to then be consumed by players in the market. So you're absolutely right that that's happening. I mean, what I would compliment to that is absolutely that there are Pay2 product that is launching in the middle of this year. I mean, we have seen some service providers obviously continue with a faster payment type network, but if you are looking for a payment initiation kind of duplicate, it is certainly not there as yet.
And Brian, do you have any closing comments on our thoughts here?
I mean, I think Craig and Brenton have hit all the major points on the open banking payment side. I think that what we consistently see when we're working with companies who are looking at opportunities in Australia, it's both a part of open banking, but it's also a little bit bigger than that. There's a couple of kind of key things that people see as major opportunities. And I think if you're starting to look at Australia, there's a couple of focus areas or data points you should really be considering. Brenton talked about this already, but to add to it, it's a heavily banked society. There's 24 million people here. The percentage of people who are not just banked, but covered under the financial institutions is extraordinarily high. There's another crazy statistic. It's something like 95% of all Australians have the same bank account that they got when their parents gave them their first bank account when they were a kid. So there's a long legacy and stickiness to the financial institutions here. And another portion of that is because there's a lot of oligopolies in Australia. We have a lot of big fours. We have a big four banks. We have the big four consulting firms. We have the big four very soon, we'll have a big four superannuation funds. We're seeing this, there's always been this centralization, and the big four banks as 80% of the market cap. However, if you can find those niche areas, and Craig and Brenton are talking about some of those with open banking, but if you can find those niche areas where they are loss leaders to the banks, or they are loss leaders to the different financial institutions, the fund managers, whatever they are, you can increase in size and scale and scope very quickly. So we have a homegrown neobank in Australia, UpBank. It was recently acquired by the fifth largest bank in Australia, but before it was acquired, it was the fastest growing bank in the world. Airwallex is another great story along those lines, where they had a very specific product focus, and that the speed in which they increased and were able to build the business was incredible. And back in 2020, they were one of the 5 largest fintech investment deals around the globe. So if you find those niches in open banking and payments and other spaces that are loss leaders for the big guys, you can scale extremely quickly. So I think it's also, if you're looking seriously at Australia, it's important at looking at those opportunities in that light too. Is this something that you can potentially jump into that other people haven't? We only have 700 fintechs in Australia. Well, it's a little bit more, about 723, 740 fintechs in Australia. We have a population of 24 million people. And depending on the report you look at, we're either the first or the 7th, somewhere in there, richest country per capita in the world. So there's a lot of money. There's a lot of money per person. It's a heavily banked population. If you can find the right niche and the right focus area, you can scale very, very quickly here.
Yeah, let me add to that, and thank you for mentioning our stats again there. I appreciate that very much. I owe you a beer later.
Thank you.
As you look at some of those niches, and this probably comes back to our original discussion around embedded finance, where you can find a niche, wealth tech, for example. Wealth tech now, as you look at the propositions that organizations are opening up to individual consumers around fractional investing or investing in the US, we're moving away from just being an online brokerage to now adding additional services in there. Revolut, one of the very first super apps, started off as a banking product, but then moved into additional services like investing. Now we're seeing organizations start with investing, but go, how do I drive share of wallet? You know what? People are also looking for banking capabilities. They want to use cards off the back of funds that are under management. So there's capabilities there. There's capabilities on the business side. As you look at the accounting firms, especially coming across from the US, they're now looking to put embedded finance capabilities, banking solutions within their product. So wherever you find a customer and you see that you're fulfilling a part of their value chain, a multi-step value story, and you're fulfilling a part of it, if there are additional parts that you can fulfill that make you stickier or that make your product more, or increase the addressable market of your product through the additional financial services, these options are really available to you right now. And that's something that we've seen in the US. It's something that we've seen in Europe really take off over the past couple of years. And that's something that we definitely see is going to take off in Australia and New Zealand. We should probably say that if you're in Australia or you're going after Australia, you probably need to think about going after New Zealand as well. They sort of come as a package deal, and there's an expectation there, although it does mean you've got to get 2 licenses and 2 regulatory setups and all of those things. It's like being in the UK and being in Europe at the same time.
Close. What I would add to that, great, New Zealand does have a great payment API rail system. So if you are looking at, but they don't have the data, so this is the slightly different. So you can facilitate payment initiation over in the UK through the Payments NZ network. So it's one of those things, and I agree, this is why I'm across Australia and New Zealand. So do look that, but don't tell the New Zealanders that, because they would not be happy if they said they were like Australia. Fun fact, I was in South Africa some time ago, about 20 years ago, and I did have someone ask me that they thought that New Zealand was a island in the middle of Sydney Harbour, and I was like, Sydney Harbour's not that big, but yeah, good question. So no.
Well, don't say that to Brian. He's American, so he probably thinks we're all the same island.
I wish I could disagree with you, but yet my parents are coming over for the first time later this year, and we're like, oh, it's just like a 20-minute flight to New Zealand, right?
We'll have to limit our exposure to New Zealand in this podcast, I think. But I mean, it's really interesting, and you've all touched upon some really great points there. I mean, we've spoken a bit about the regulatory landscape and the business landscape, but I'm just wondering, in more of like a holistic sense, do you see any major differences in shall I say, the appetite for open banking between the UK and Australia?
I'll jump in on that really quick. But so we have 6 companies in our portfolio right now who are UK based companies, and so we do a lot of comparison between the two. But before I answer it that way, I'm going to go back. I got my start in tech over a decade ago as I was working with mobile. I was running a mobile app marketing agency, and we learned something really interesting about Australia early on that has been consistent ever in any part of tech that I've worked with, and is still consistent in fintech. The user demographics are almost identical to Western Europe and to the US. The cost per acquisition is lower, the stickiness is higher. So it means that you can run a variety of different types of campaigns and tests in Australia if you were comparing, apples to apples here, for cheaper, and you tend to get more out of those tests by learning more. That's been consistent from the very, very beginning. Beyond that, there are a lot of other similarities as far as where people want to put their money, what they want to be doing with their money, what they'd like to be focused on with their money. The goals behind open finance and embedded finance tend to be the same. It's about just unlocking those different pieces. Now, at a much more kind of specific level, there are obviously differences between the regulatory environments. We have more than this, but we have 3 regulators that touch on the finance side in Australia. So understanding and navigating the regulatory system here is very different from the UK. Also, because the fintech landscape is much younger in Australia compared to the UK's ecosystem, the rules aren't as clear here as far as what can and can't be done in every case. There are regulatory sandboxes, or a regulatory sandbox, I should say. That's with ASIC. There's actually a new regulatory sandbox around CDR specifically from the ACCC. So there are places you can go to test this out, but they're not completely on their own, and there's not always good information on what you can and can't do. So there's really good things about Australia, and there's things that I think you really need to be aware of. The last thing that I'll just end with, which is a little outside of this, but I do think it's important to note, the amount of funding that Australia is giving to fintechs is increasing dramatically. Australian VCs do tend to want to invest into companies that have a major footprint in Australia or are headquartered in Australia. But the funding sizes and the check sizes are getting much bigger, and they're co-investing across other spaces and places. It's still not as big as what we see coming out of the UK, and nothing touches the US, but it is quickly growing in a regional perspective. So I just think it's another piece to touch on there.
No, and it's really positive to see all this investment sort of building up, and the excitement around fintech as an industry really accelerating. Craig, I was just wondering what your thoughts were here.
Look, yes, there is some complexities with the different regulators. However, I would say that probably pales into insignificance when you look at the complexity of PSD2 in Europe. We don't have PSD2 in Australia. So some of those challenges that we've seen in Europe with what can you do without a license, or different types of licenses? What does that mean as you start to provide services in Australia? You don't have that issue. And we see a lot of organizations who are moving from Australia the other way and haven't considered PSD2, not even GDPR, but just PSD2. And suddenly go, oh, that's going to change my business model, or that's going to have impediments on the structure of the deals that I run. So I think that's a significant benefit for any organization who's coming across from the UK or Europe over to Australia. It's not something you really need to consider from that perspective.
I mean, for me, Truelayer's business, like Airwallex, enables people to cross borders, right, in very different products, but ultimately that's what we do for technology companies and businesses. So we do see very similar things. What I'd say is a European headquartered business, or I should say UK headquartered business, it's no longer European, but with a big European business, Europe is not a place, Like, it's like calling Asia a place. It's like calling America a place. Like, there's 50 states in America, and there's 50 states in America. Like, that's the point. What I'd say about the attractive thing about Australia is, whilst, you know, maybe Western Australia is off being its own country, you know, doing what it needs to do. The good thing about the regulations is that they're national, right? The point being is, and therefore that makes it easier. Whereas you look at Europe, you don't need to talk about Europe. You need to talk about whether I'm going to France or Germany or Spain or Netherlands, right? These are big markets and big countries. As opposed to Australia, you come to Australia and you tackle Australia. So it doesn't have that state-based segregation, obviously, because we've only got, you know, 25, 26 million people. And having been a business or led the business expansion for Truelayer here in Australia, I can tell you that it is difficult, you know. So you need to get across, you know, the tax, you know, the various legislative and regulatory permissions that you need in order to enter the business. So it does take time. So I would recommend getting onto these things early rather than later. And my key recommendation here is get yourself a really good accountant. And I don't say that just because I'm a chartered accountant. I'm saying that the lawyers know one thing, but the accountants actually know how to get it done. Is probably what I would recommend. So because there's what the law says, and there's actually the activity that's required to get there. So you know, I think you need a good representation of both. But coming to Australia, it is an excellent market, and, you know, from an open banking perspective, it is the next place after PSD2. Right? There's a reason why Truelayer is here. We're an open banking company. That's what we do. This is why we're here, because the regulations enable us to operate in these markets. We can't do it in New Zealand yet because they're not there. Singapore can't be done. Most Asian markets you can't, because they don't have open banking regulations. So I'd say it's highly attractive. Come to Australia. There's some good products, good coverage, and payments is coming. So I'm very positive for it as well.
Well, that's a fantastic discussion that we've just had, guys, and I'm very, very happy to hear all of your thoughts. I think it would be really interesting to get your take on cross-border payments. Now, what my next question to all of you is going to be is a bit of a loaded question, and I'm going to put it to you. I'm going to put two questions to you at once. But essentially, I would be really interested to know more about how open banking is facilitating cross-border payments. And I think, as a second part of that question, are there any challenges that are yet to be considered or haven't been dealt with fully? What are your thoughts here, guys?
So let me kick it off. Since Airwallex facilitates cross-border payments, I think you can do them separately, but also as they come together, they can they facilitate a better process as well. So, you know, cross-border payments, you know, and the provision of how you move money around the world can exist without open banking. However, what we've seen is, as you start to move money around the world, as you're sending money to a bank account in the country to a person that maybe you haven't met before, how do you reduce fraud? Because unfortunately, as the volume of people you're sending money to and your ability to understand if they're real or not, as that decreases, the opportunity for fraud increases. And that's why we see, you know, organizations that are moving money around the world. We have everything from AML checks, anti-money laundering, fraud checks, you know, is this a real person? So we do all of those things. There isn't really an ability right now to globally validate whether the person you're sending the money to or even their bank account details are correct. So whether it's fraud at one end of the spectrum or just, you know, mistyping at the other end of the spectrum, there is the opportunity to lose money. So I think where open banking comes in is the ability to check the beneficiary, the person you're paying money to. Are they real? And are the details that you've just entered to send money to them, is that correct as well? So it's the fraud, but also the mistyping. Because what you don't want to do is eventually get money to the other side of the world and realize it didn't go to the place you were trying to send it to. I think this is probably where Brenton can come in and talk a little bit more about both CDR and open banking on both ends of the spectrum and how it helps that.
Yeah, you're absolutely right. It's such a great use case, and this is what Airwallex does great across the world. And we help a number of platforms to do this, like say cryptocurrency is a great example, share trading platforms, e-commerce type businesses who either cross border or domestically. And I agree with that use case is that in Australia specifically and in other markets, you've got AML, CTF compliance obligations where just on that alone, having an open banking powered verification on a pay in or a payout rail adds a significant amount of value. And I agree with what Craig's saying. It's not just the compliance part; it's actually making sure it gets there. It gets there to the recipient that needs to get to, and the amount of effort it takes for a platform like Airwallex to chase that up, a failed payment, or the customer needed to transact that, they have to have a backstop, etc. So there's a lot of wasted energy if a payment is failed. So you want to make sure you get it there at that time. I want to say to a product like what Truelayer has, our data product, if you're using our data product for a verification, you're not just checking the existence of an account. You can check balance, existence, name, and you can even go so far if you have the smarts to do so, depending if you're pushing or pulling money, the right dates that you want to do these things as well, right? So there's these supercharging opportunities that you can really optimize what I'd call where we're seeing the take-up of these sorts of use cases. It's high value, high risk or high reward type payments. So if you think about if you're doing an international remittance, you're doing it for a reason, and it's probably because you're trying to purchase something or fund something at a particular point in time. Therefore, there's a time element to it. It's probably of higher value, similar with a crypto or share trading use case. What I'd say the challenges of the cross-border piece is that there's still absolutely fragmented regulatory pieces, right? So, to Craig's platform at Airwallex, if you've got an on-ramp and an off-ramp, something going from Australia to the UK, you have to do a verification in the Australia CDR obligation, and then you'd have to do a verification on the payout on the other side, right? You can do all that, say, through someone, Truelayer, our single product, but ultimately the consumer would need to do those consents separately because they're two different banking systems, two different regulations. And I think therein lies the opportunity for a cross-border business like Airwallex or Truelayer, whereby you could say, okay, well, you've got the commerce happening cross-border, the regulations haven't caught up to that yet. And we had a conversation last Thursday at an event that we hosted at Truelayer all around interoperability and the opportunity for these things. And I think cross-border payments and remittances is a wonderful space to improve trade and improve commerce.
Well, thank you very much, Brenton. And Brian, I was just wondering if you had any closing comments to that.
These two are the experts on the product side for all of that, but I'll go a different route with that same question, which is, so we've talked about the way that what can cross-border payments facilitate? How does that actually work? How does that fit into an open banking ecosystem? I might go a slightly different way to say, one of the things that we see, so every year we look at between 10 and 20, sometimes more, 30,000 companies a year when we bring companies or when we are asking companies to join our accelerator programs. So we'll go from 30,000. Last year we looked at 32,000 companies, 32,000 fintechs globally, and then we select the 10 from there. When we do that, we pull a bunch of data. And so because we're looking at a pre-seed, seed stage, we're about 2 to 3 years ahead of like a CB Insights report with the data that we're providing. One thing we're seeing globally is when it comes to payments hasn't stopped increasing in the sense that there is still a bit of an increase year on year from the last 3 years of payments companies increasing, but the rate has slowed significantly. And if we compare payments in Australia as a subclass of fintech more broadly, it has plateaued. So what I think Brenton and Craig are really hitting on is, I think we're starting to see there is a big opportunity in cross-border payments. Australia has one of the larger remittance rates globally. We're actually right next door to the largest remittance area in the world, which is the South Pacific, which is the highest remittance per capita of anywhere in the world. When I say that, I mean the entire South Pacific islands, excluding New Zealand and Australia. But what we're seeing, at least in Australia, is that payments as a whole, which includes cross-border payments, is plateauing, that the overall global growth of payments, fintechs, is starting to, I think by next year, it'll probably plateau. And so why have fintech founders started moving away from that compared to, we're seeing a huge increase in sustainable finance. We're seeing a huge increase in asset and wealth management. Why are they moving away from that? And I think that goes back to the points that Craig and Brenton are talking about, is those complexities. The complexities between, we're figuring out the basics of, we've been able to go from bank to bank. We're starting to figure out the basics of some of the global AML KYC, where AML KYC can be interoperable when they are making sense. Now we're running into bigger problems of, how do I send money to somebody or somewhere that doesn't operate inside of one of the globally acceptable payment solution platforms or payment rail systems? That's a big problem, and that probably won't be solved by, as much as I love fintechs and we all love fintechs, that probably won't be solved by fintechs unless they truly become a globally operating type of a solution platform. Now, down the road, somebody like Truelayer, somebody like an Airwallex, I think will eventually give us into that spot. But I think it's important to note that those problems that they're raising are big enough problems that it seems to be influencing the way that the industry globally is approaching it. And it's definitely approached it differently here in Australia.
Can I add to that, Brian? The whole idea of open is not exclusive to fintechs, of course, right? And I think this is a great opportunity, is that the banks can equally use these to issue value propositions and develop these global value propositions. So, in our space, we're obviously seeing the cards come in and play in the account-to-account payment space, moving away from their kind of proprietary card networks, right? So it's a great example of activating and using open banking networks to do things. So I think you're absolutely right. The opportunity is there, but we need a collaboration on the opening up and then also the making it happen. And it just so happens that the fintechs are typically ones a little bit faster to make it happen. I think Revolut's a great example of a business who has done that globally, and Airwallex as well, to see, trying to bring these value propositions and simplify it. Another example for me is what Uber's done with payments. The fact that, the amount that I used to travel pre-COVID and I never think about getting a cab, right? The fact that you could get an Uber anywhere you go and payments would still work. Like, the fact that you're still using a single platform, you weren't having to, set up these, payments in each market. Like, just the simplicity of that thinking, they figured cross-border payments, and it's not even cross-border payments, right? They're just enabling you to transact. And yes, there's cards that sit behind that, but I think that's a great example of how do you make a financial product so simple that I can do that without even having to think about it. Like, who would have thought, today and age, you jump on a plane, you don't take any cash with you because you can just walk out the airport, jump in an Uber and not worry about paying in your local currency. That's awesome.
What they've done is they've taken what is a globally complex problem, and Brian, you're absolutely right on this. It's not a simple problem when you're looking at how do you create some level of uniformity across global financial infrastructure, global regulation. Even the regulation part is hard enough. And what Uber have done is just made that seamless, so that you don't even have to think about the payment or even the fact that it's cross-border or outside of your normal sphere. I think that's probably why, at least right now, we're seeing maybe some of the startups' velocities or volume slow down, is that it is highly complex, and there's a lot of investment you need to do up front before you see any return. And especially in current markets, as you're looking at valuations, you want to see a return relatively quickly. If you need to build the infrastructure first or set up the relationships with the global banks first, that takes time. And, I think there is other opportunities right now that maybe aren't as large, but the time from kicking off an idea to actually having a valid proposition in market can be a lot faster.
100% agree. I mean, it wouldn't be great if we could power all of these networks with account-to-account payments using open banking rather than cards. So we'll get there in time. Just use your Face ID and you can transact. So
I was about to say, and if there was some form of digital identity that could prove all of that really quickly.
Exactly. Exactly.
one day we'll hopefully get to the point where we won't even need to carry ID at all.
Except in Victoria, you'll always have to carry something physical in Victoria.
That won't make sense to you, Tyler, but that's fine.
No, I have yet to visit, but when I do visit, I'll be sure to carry my ID.
Well, let's just say COVID created a new. My earlier comment about the fact that we're one nation did not happen that way during COVID time. So
that was some COVID lockdown resentment speaking there.
So we will have it. Well, this has been a really fantastic and really fruitful conversation. Unfortunately, we are sort of sensitive on time. So I think for my final question that I'd like to set to all of you is where you've spoken so much about how promising Australia is and how many hurdles it's overcome and has yet to overcome. But from your point, from people who are working on the ground, I was just really interested to know what your take would be on the future of this industry. I mean, are there anything that you would like to see coming forward? Is there anything that you really see as taking the wheel? What are your thoughts here?
Let me kick off. I think we've talked about this, but for me, payment initiation is the key thing that I'd like in Australia. I really am not sure about the validity of the decision to move into additional information provider type scope. So going broader, not deeper. It may have been the right decision at some point in time. I think if we're looking at innovation and driving innovation, there's going to be greater return on the investment by moving into payment initiation than going broader. So that's definitely something that I'd like to see happen, and certainly the conversations that I have, whether it's with industry bodies, the Tech Council, or just the government, is with regard to that. I think also we need to try and get the banks involved as well to try and push that, because they're the ones who are going to enable it. But yeah, payment initiation is the key thing for me, because as soon as you can make real payments real time, but initiated from the payer, and then a real time acceptance from the beneficiary, the world just, so many things start to become available to you that you don't have right now. Whether it's new business models, reduction in fraud, increase in acceptance rates, all of these are going to help global commerce in Australia. So I think that's a key thing for me. I just wanted to jump in with that one before either of these two said the same thing, and I had nothing to end on.
That's a good call. Without agreeing too much with Craig, which I do, I think I'll take it. I'll add a little bit to that one, because I don't want to repeat what Craig's saying. I completely agree. The bit that I'd like to see is, and I've said this publicly before, we have to finish off banking first, right? We aren't there yet. We need to get payments moving. It's the so what? It's the killer use case. So let's get there. Craig and I mentioned previously Pay2. It's a facility that's being offered by the equivalent of the faster payment network in the UK. It's called the New Payments Platform. It's an intermediated model to do something similar, but in essentially in an intermediated way. So instead of it being an open banking API that people connect to, you connect with the NPP, and then they facilitate the messaging and the transactions. So it's not perfect open banking. It's kind of like one step removed from that, if you think about that. That does pose some opportunities and challenges. The positive things, it's obviously happening sooner. The challenges that you need to work through an intermediary. What I'd say is, with the opportunity of open banking payment initiation coming, we know it's only a couple of years away, and Pay2, there is a potential conflict. So the other thing that I'd like to see is some coming together of those two essentially rails, if you think about them, because there could be a future whereby they're competing with each other. Whereas in the UK, we've got PSD2, you've got PIS, and you've got PISPs. It's very clear what the instructing layer is as opposed to the rails, right? There's one instructing layer, and then there's a faster payment rail that facilitates that payment. So I think, to Craig's point, let's get to payments faster, but then let's now have the conversation about how do we smooth it out so we're not conflicting in the future.
Well, that's brilliant. Thank you very much, Brenton, for sharing that with us. And Brian, I was just wondering if you had any final thoughts on this.
I'm going to take us in a totally different direction from what we've been talking about up till now. I mentioned niches earlier, and I think one of the strongest ways when you're looking at somebody who's also worked globally in different ecosystems, one of the ways to really see how strong is any given ecosystem or any specific area of the ecosystem, like payments, how well have the companies in those spaces done? Have they become unicorns? Have they grown? And are they now reinvesting into the ecosystem itself, right? And the answer in Australia is what we're seeing over and over again. Big companies are becoming and turning into unicorns. And then those companies are opening up either their own venture capital funds or their founders are opening up their own family offices for venture capital funds. And so the reason I come back to niches is we're getting to the point now where the initial niches that we saw 4 or 5 years ago in this space and payments are being built out really quickly by some incredible companies. Now, those same companies are going to start looking for opportunities that they can invest into and to invest in new technologies and other spaces and places. So for me, one of the major opportunities, or what are the low-hanging fruit that, and Craig, I'm going to use you as an example here because Airwallex does have a very public fund that you guys have announced. What does Airwallex need that it doesn't currently have? Can you be providing them that service? Is that something that you would want to go after? That's a huge opportunity point. It's not just the Airwallexes of the world out there. Most of the major fintech founders who've either exited or have raised have started building out their own funds. How can you provide service now to these fintechs, not just to the major banks? That's becoming its own opportunity space. So for me, I think that's a massive opportunity. I think the payment side and the open banking side and the embedded finance side, because we've talked about them as 3 different places, are really, really important. I do just want to say that the area that I am most interested in, and one of the areas we're most interested in, well, I should take that back. Sustainable finance is what we're most focused on. We just launched a fund to focus on that. But the area that I get really excited about is what we know is next on the CDR timeline, which is superannuation and what I call super tech, because I just like saying super tech. It's the largest area of funding in the country. It has the most assets under management. It's a $3 trillion industry. It is a government mandated oligopoly. It is private organizations that have not had to move quickly or been disrupted. And there is a huge amount of opportunity there. And I'm really excited to see what comes out of CDR and the opening of their data ports. That's going to be something that looks like it will be on the table at the beginning of 2023. The major funds are already discussing this. I know that because I've been brought in to discuss it with them and what they can learn from what's happened with CDR in the finance space. So from a longer term perspective, there's a huge opportunity around what we've been discussing here, but as it relates to the biggest financial industry in the country, which is superannuation. So those are the ones I get excited about.
Well, thank you very much, guys. That was a hugely insightful conversation, and hopefully only good things to come for the fintech ecosystem in Australia. And speaking of which, for those of you listening that are interested in Australia and the opportunities in fintech, you can check out the Australian Trade and Investment Commission at austrade.gov.au/fintech. They focus on all things like providing market profiles and insights, and are active in providing introductions for companies looking to invest in Australia, as well as helping companies move out of Australia too. Well, thank you very much, Brian, Craig, and Brenton. It's been fantastic to have you here, and thank you so much for raising all of these interesting points. It's been great.
Our pleasure. Great to be part of it. Thanks.
Thank you so much.
Thank you.
Thank you for listening to the Fintech Times podcast. We hope you enjoyed the discussion as much as we did. Don't forget to check us out at thefintechtimes.com and subscribe to our monthly publication to keep up to date with all the latest fintech news.